Hi everyone and welcome back to the channel. In today's video I'll be going over the McDonald's stock, dividend stock analysis. So before we get into the context of today's video, guys, if you're new here, definitely consider subscribing if you like the content, what you see. Like this video as well. Obviously I'm trying to boost my channel to more people, so the more support, comments and likes this video gets, the better my channel will do. So yeah guys, let's get into the video now. So obviously I'll be going over the stock analysis of McDonald's, obviously massive company on the New York Stock Exchange. So let's go into a little bit of information about the company now. McDonald's Corporation, ticker symbol MCD, on the New York Stock Exchange, founded back in 1940. Obviously restaurants and fast food industry in the consumer services sector, with a market cap of 137.498 billion, which is a massive company, guys. If you have a look here, the number of employees across the world, as of 2019, December the 31st, they had over 205,000 employees across many different stores. Obviously, there's many in America. Obviously, there's a lot here in the UK as well, a lot of different stores. Everyone is partial to McDonald's every now and again, guys. So let's just have a look now into the price and news of the company. So they're currently trading around $184 US as of Monday the 13th of July 2020. You can see it's narcissistic. They've had a bit of an up and down time, as a lot of stocks graphs sort of follow a similar pattern, a big uptrend, and then sort of like a really weird V shape. Obviously with the McDonald's stores, probably, I think I don't know, here in the UK, I know some are opening again, so that'll probably align with the share price rise as it's getting back up again. Valuation of McDonald's, sorry, a bit of a glitch there, guys. That didn't really move how I wanted it to. So you can see the current share price, as I said, is $184. It's slightly overvalued by 17.7% in the Simple Wall Street app. So that could be something to consider if you're thinking about investing in this company. Maybe that's slightly too high at the moment, especially if you're a growth investor. You don't want to be buying in now and then it dropping back down to what is said to be its fair value of $157.16. But if you're a dividend investor and share prices don't matter that much to you, then by all means go ahead, and we'll get into the dividend yield later. But obviously just check out the share price and what they think of their fair value is. I think it is good to know this sort of things. So now after that, we'll take a look into the health of the company. This is basically the financial health and how is the financial position. So obviously it gets quite a poor score of a 1 out of 6 at the moment. So has a negative shareholder equity, which is a more serious situation than short-term assets not covering short-term liabilities, which is never good. Obviously negative equity is basically they don't have enough cash. Basically that's what that is. I can see they have a debt level, they have a negative shareholder equity. Obviously again it says the same thing, and all of them basically say the same thing, negative shareholder equity. So they don't need to check if its debt is reduced over time. So that's not really a good sign. The only thing that is good is that their initial debt payments are covered by the EBIT. You can see their liabilities. That's probably the most alarming thing, guys. Short term isn't so much. Obviously their assets are outweighing their liabilities, but you can see in the long term they're up by around 10 billion. The liabilities are higher, so that's probably something to be of concern, especially in the long term of the health of the company. Hopefully they do sort of recover it. Obviously the companies like McDonald's are absolutely huge, so we'll have to see how they recover. As you can see, the two debt to equity has gone in absolute. The debt has gone higher and the equity has gone lower. So they really are quite struggling financially at the moment. As you can see, the equity is minus 421%. That's the ratio. You can look at the balance sheets. They have $36.6 in physical assets, 6.8 billion of long-term assets and long-term other assets. Sorry. Cash and short-term investments, they have 5.4 billion, and receivables they have just over 1.5 billion. But liabilities and equities now, So they have £39.2 billion worth of debt, which obviously no debt is usually ever good with companies. And they have a liability average of 20 billion. So now we'll just check out the dividend yield of McDonald's. It gets a 5 out of 6 score. So basically this is just going over the current yield, so it's 2.70%, 2.70%, and it's just sustainability and reliability. So it gets a 5 out of 6 score. So the dividend of 2.7% is higher than the bottom 25 payers of the market, which average at the US market, which average at 1.68%. The yield is low compared to the top 25 dividend paying companies in the US market, which average at a 4.6% yield. The dividends per share have been stable in the past 10 years. That's basically meaning they've not cut the dividend at all. They've been consistently paid out to shareholders, which is good. That's one thing you need to know as a dividend investor. Score number 4, the dividend payments have increased over the past 10 years, so it's a good dividend growth strategy. Constantly been growing the dividends higher, and not just keeping it at the same percent aligned with the share price. Score number 5, with its reasonable payout ratio of 62.5%, the dividend payments are well covered by earnings, and the dividends in 3 years has been forecast by potential earnings of 64.4% payout ratio. Obviously, they do allocate cash for dividends within money that they get, but with the amount of debt that McDonald's have, I do think this is sort of a bit worrying. Maybe it doesn't sort of say it because it's only focusing solely on dividends. But with the company health overall, I wouldn't be surprised if McDonald's got a dividend cut, regardless of what the yield score gets. So that's something to be sort of cautious about. So I say it's a good idea to invest in McDonald's. Personally, I wouldn't invest in them right now, as the points I've made is they're quite overvalued at the moment, and the amount of debt the company have is quite concerning. Although they do get a good dividend score, that doesn't tell the whole tale. So I personally wouldn't invest in them right now, but let me know what you guys think in the comments below, what you think of McDonald's, if you invest in them at all. Let me know your experiences of investing with them. So yeah, on that note guys, that is pretty much it for today's video. Don't forget to like this video if you like it, get in the comments and engage, boost the YouTube algorithm out and get my channel to more people. So on that note guys, I'm going to leave you to it today. All the best, take care, bye.